Welcome back to Explain the Charts. Today we're going over USDJPY, one of the most volatile currency pairs in the market, and analyzing its recent behavior through news and chart data. Looking at the recent news, we see a lot of focus on the Bank of Japan's, BOJ, potential shift away from its ultra-loose monetary policy. BOJ Governor Kazuo Ueda has hinted at a potential increase in interest rates, a departure from the negative interest rates that have been in place for years. This shift has already put selling pressure on USDJPY, with the pair dropping sharply to near 146.00. The markets are speculating that the BOJ might even end its negative interest rate policy, NRP, entirely by raising the key rate to 0% in 2024. Some analysts predict this could happen as early as January, while others believe it's more likely in the second quarter. The Fed, on the other hand, is now focusing on preventing labor demand, given their confidence in inflation returning to their 2% target. This divergence in monetary policy between the Fed and the BOJ has already pushed USDJPY to test multi-decade highs near 152.00. The USDJPY pair is highly sensitive to news and decisions taken by both the Fed and the BOJ. Now, let's take a look at the USDJPY daily chart and see if we can spot any correlations between the news and the chart data. Zooming out on the chart, we can see a clear trend of upward momentum over the past several months, reflecting the strength of the US dollar. However, the recent decline in the USDJPY is evident in the last few candles, suggesting a potential shift in the overall trend. The past several months have seen a sustained upward trend, pushing USDJPY to test its recent all-time highs. The trend has been marked by a series of consecutive green candles, indicating consistent buying pressure. The recent red candles, however, signal a shift in sentiment, with sellers taking control. Let's zoom in on the last 2 weeks of candles to get a closer look at the current price action. If we look at the recent price action, we can see the decline has tested a key support level near 145.00. This level is significant because it represents the August 26 daily low, which the USDJPY previously bounced off. It's interesting to note that the USDJPY has been erasing its gains from the previous day and falling back to near 146.00. The pair has been volatile in the last 2 months, and this trend seems to be continuing. If the USDJPY breaks below 145.00, we could see a more significant decline, potentially testing the 143.45 level, which is the August 26th daily low. This scenario is more likely to play out if the BOJ continues to signal a hawkish stance on interest rates, and the U.S. economic data this week points towards a cooling economy. However, we must consider that the market is currently relatively quiet, with yields slightly down on the day. Risk sentiment is cautious, but not overly defensive. The upcoming U.S. jobs data may help determine the Fed's easing cycle approach, as Chair Jerome Powell stated the importance of the jobs market in easing policy. Switching to the 1-hour chart, we can see a more granular picture of the price action. We can see a lot of back and forth movement, with the price fluctuating within a range of roughly 145.50 to 146.50. This consolidation phase is typical during periods of uncertainty in the market. If the price breaks above the 146.50 resistance level, we could see a short-term rally towards 147.00. This rally would likely be fueled by short covering, as traders who had bet on the USDJPY falling would need to buy back their positions to minimize their losses. However, if the price breaks below the 145.50 support level, we could see a continuation of the current downward trend. The 1-hour chart is crucial for understanding short-term fluctuations and making quick trading decisions. The 1-hour chart often reflects the sentiment of the market and provides a more immediate indication of where the price might be heading. The trend lines and support and resistance levels on the 1-hour chart can be valuable tools for scalping and day trading. Finally, let's take a look at the 15-minute chart. This chart provides the most granular view of price action, highlighting even the smallest fluctuations in the market. The 15-minute chart is ideal for scalping and taking advantage of short-term opportunities. Analyzing the 15-minute chart can help us identify breakouts and retracements that might offer lucrative trading opportunities. To recap, the USDJPY is currently in a volatile phase, influenced by the BOJ's potential shift away from its ultra-loose monetary policy. The daily chart shows a sustained upward trend in the past several months, but the recent decline suggests a possible trend reversal. The 145.00 level is a key support level that could be tested if the downward trend continues. On the 1-hour chart, the price is consolidating within a range of 145.50 to 146.50, with potential for short-term rallies or declines based on the breakout of this range. The 15-minute chart provides a granular view of price action, allowing for scalping and short-term trading opportunities. In conclusion, the USDJPY is poised for volatility, with the BOJ's monetary policy decisions and upcoming U.S. economic data shaping the pair's future direction. Keep an eye on the price action around the key support and resistance levels, and remember to use proper risk management techniques when trading.